Every generation of Morgan Stanley's had its challenges. But the financial crisis was a completely different level. This was a crisis and a challenge which we'd never confronted before.
Some big news coming out of Morgan Stanley at this hour.
Morgan Stanley, much greater loss than anticipated here. They're taking write-downs totaling $9.4 billion.
The loss a direct result of Morgan's $9.4 billion in subprime mortgage and other mortgage-related write-downs.
This is a firm that over 65 years previously had created $30 billion of capital. One trade effectively cost us $10 billion.
We were so shocked that we could have done something so stupid. One of the analysts called us the gang who couldn't shoot straight.
We really screwed up. There was no doubt about that.
The general sense of, grow, 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 put us into some businesses that we paid a very high price for. We lost our way. When you think about proprietary businesses, you're not thinking about clients.
It was a real redefining moment. We wrote down and got rid of bad positions. We completely resized the investment bank.
We needed to look for an investor to help fix that hole. And we linked up with CIC, a Chinese sovereign wealth fund.
The CIC put in $5.6 billion in December.
The loss was so enormous that, frankly, we all believed that was kind of the end, that we had taken our medicine and that we could go forward.
I built up a huge cash pile, $130 billion. We just needed more protection as we rebuilt the business.
A powerful new punch in the gut for Wall Street.
Breaking news, J.P. Morgan Chase is buying Bear Stearns at a rock-bottom price.
Our economy obviously is going through a tough time.
Fannie Mae and Freddie Mac were in free fall.
Real estate, $2.4 billion
is a credit crisis.
Lehman Brothers. Lehman Brothers stock falling 44%, one of the biggest single-day percentage declines on record.
We know that they need to raise capital, but where's the actual announcement of a deal?
The Friday night we get the call. John and I, CEOs and CFOs, are pulled to Liberty Street. So we got there and we knew it was about Lehman.
We went into the weekend knowing this was like a full-scale run on a huge part of the financial system. We brought everyone together to see if we could find a market solution to those problems.
Late into the night and all weekend, the bankers, the masters of the universe they're sometimes called, they met in a desperate effort to rescue Lehman and stop the bleeding.
We came to the conclusion that Lehman was in much worse shape than anyone else. We break up in groups trying to figure out how could you keep this from being a house of cards totally falling.
Certainly the banking regulators knew that if, as one falls, another falls, because ultimately panic is what drives bank collapses, not lack of capital.
When people began really looking at it, the numbers just didn't add up.
Tim Guyton would pull us all in every hour, and he'd go try harder. We'd have to go back into a room for an hour.
It was impossible to get anything done. It was impossible to understand some of the risks.
And the only solution at that point would have been Barclays actually buying Lehman at some price. But Sunday morning, I got the news that the British government was not going to allow the Barclays transaction to happen.
And that's really when the proverbial hit the fan. Secretary Paulson said there was no way he could save Lehman, without a buyer coming in.
The tone of the room shifted quite dramatically. All the CEOs in that room knew there was going to be a series of dominoes yet to fall.
Bear goes down, Lehman goes down, Merrill gets bought.
These were institutions that had been around for a very long time.
And all of a sudden, we're next. It was terrifying.
And I remember Tim said, "Can you guys last a week with your cash?" Now, I laughed because I had $130 billion of cash. Like, how could we not last a week?
The collapse of Lehman Brothers set off a wave of panic on Wall Street.
The worst one-day point drop since 9/11.
Even the health of the most trusted firms are now being called into question.
If you walk into any funding desk on a Monday morning, the phones are ringing. And as we walked in that day, the thing that was really eerie was there were no phones ringing. There was this degree of just complete silence.
You saw people behave as if the U.S. was going into a Great Depression, that the system was going to collapse, that most of the major institutions would fail. and that there would be catastrophic losses.
We began to see very significant draws on our cash. We began using that liquidity that Colin had put aside, we began using that liquidity very quickly. And that amount of money that we thought would roll for a few months, we had lost a third of that in a day.
It's like you have a raging forest fire, and people are like adding fuel to the fire. You couldn't see people lining up on the streets outside Morgan Stanley trying to take their money out, but it was a run, just like a classic run from the 30s on a major bank.
I mean, on one day alone, we lost $65 billion of cash.
We needed, in a really short period of time, with a lot of pressure, to raise capital.
We had everyone up here, okay? We were trying to find anyone with cash who wanted to do an equity investment.
The Kuwaitis, the Qataris, sovereign wealth funds from around the world.
Canadian pension funds, folks in the Midwest, talking to investors there.
Warren Buffett, we'll get Warren Buffett on the phone.
It's kind of like a music chair, or like every day you hear the different name.
There were people camped out in offices on the 40th floor, people literally sleeping under desks and on couches.
This was sort of life and death.
I mean, if we didn't do a deal, it was over. We couldn't stay in business.
We were under immense pressure. Can we just make it to the weekend? We just needed to make it to the weekend to figure out how much liquidity we had. The CIC showed up, and they had been involved in the prior year. So we were in a meeting up on the 40th floor to decide, well, what should we ask for? It was like almost Dr. Evil-esque. We were going to ask for $100 billion. And we did. We asked CIC for $100 billion of liquidity, not capital. It was just a loan. And they, of course, said no.
I remember going home and saying, I don't know if we'll be here on Monday or we won't. When confidence erodes, it's very hard to change that tide.
Friday night, I'm across the road, and we're just getting to eat for the first time in God knows how long. And I get a phone call from John Kindred, who's the president of Morgan Stanley Japan. John said, Colin, MUFG want to invest in Morgan Stanley. Can you put a deal team on? I said, John, I'm stretched. I haven't got people to give you. What people didn't realize is that for 2 years before, we'd been actually talking to Mizuho about doing a deal with Mizuho for 2 years, and it had gone nowhere. So suddenly I've got another Japanese bank that wants to dictate time and resources, and it's probably going to go nowhere. So I was pretty anti putting a team on.
A lot of people were skeptical about it because Japanese banks don't move quickly on most things. I pleaded with him pretty strongly to assign some people to get on this thing, and so he did.
We were here Saturday night. I remember getting a call from Geithner, and Geithner said, what's your plan? I said, well, our plan is the Japanese. He goes, what's plan B? And I said, what do you mean plan B? He said, what's plan B? The Japanese, there's no way the Japanese are going to do this deal. They don't operate this fast. I said, Tim, trust me, we got this covered. We don't need a plan B. I had no idea if we needed a plan B or not.
Morgan Stanley couldn't afford to sort of drift into the week with uncertainty about whether they had capital. We were just like using duct tape and string. We were just trying to figure out like anything that might plausibly reduce the chance that these guys go off the cliff.
We were waiting for the Japanese so we can start negotiating. So it's a Sunday. We're in my office. We're watching the New York Giants football game. My assistant walks in and she says, Hank Paulson's on the phone. He wants to talk to you. And Hank said, I'm on here with Ben Bernanke and Tim Geithner. And they start a rundown of how bad it is. We cannot have Morgan Stanley in free fall. You need a partner.
The dilemma was you had a bunch of institutions that had much more stable funding bases, and you had a set of firms that were much more fragile. And a typical thing you could do at a financial crisis is try to put those firms together. We weren't so worried about Morgan Stanley itself. We were worried that the economy couldn't sustain the risk of the collapse of a huge part of the financial system.
And Geithner says, I want you to call Jamie Dimon, he'll buy the firm. I said, yeah, he wants the firm for $2 a share. And Geithner said, well, I don't care what he pays you for it, do it. And I said, I won't do it, and I hung up on him.
It would have been catastrophic. I mean, basically the shareholders would have been wiped out. Half of the employees would have been fired at least. It just would have been a very bad, for basically all of the stakeholders.
If we don't take an action, we might be gone by next week. So under that pressure point, the real hope that we had was with MUFG.
In a world where you have no attractive options, even if it was a long shot, it was definitely worth spending the time to figure out, was it going to be real?
Morgan Stanley, as early as the 1970s, was investing really extensively in Japan.
We used to have trainee programs with Japanese banks where several of our close Japanese banks would send trainees into our organization.
I was chosen as the trainee to Morgan Stanley. Morgan Stanley's style is always consistent, loyal to the client, and we really trusted Morgan Stanley, and we knew what they are. 1 week after Lehman collapsed, the market was in turbulence, and Morgan Stanley could be the second Lehman Brothers, but this is quite interesting opportunity.
If you were convinced Morgan Stanley would survive, this was going to be a great investment. But you had to pass that threshold question at a time of extreme stress in the market.
We at MUFG had already completed the study how to build our global investment banking capability prior to the great financial crisis. One option is making the meaningful investment into first-class global investment bank with which we enter into strategic alliance. If chance arises, we were ready to go ahead.
Goldman Sachs and Morgan Stanley, the last big independent investment banks, are now converting to bank holding companies.
All of a sudden, we had access to the Fed window. It was clear that the broader U.S. government was trying to find a way to stop the crisis.
But let's be clear, we need the cash if not, the doors were shutting. You have more money going out than more money going in. And at that point, we needed the capital, and the Japanese capital was exceptionally important.
Morgan Stanley announcing a major capital raise, announcing that it has signed a letter of intent to form a global banking alliance with Mitsubishi UFJ, that is Japan's largest bank.
The letter of intent and the transition to a bank holding company really gave us a sense of relief that we were actually going to make it.
There was still a due diligence period that had to take place. So they needed to scrub our books. And if our books weren't what we were basically representing they were, the whole thing could have come falling apart.
After we made the initial agreement, things got worse. And suddenly we were really concerned.
The press began speculating that, in fact, MUFG was not going to honor the deal. And so our stock price kept going down. It had been up in the 20s, and it hit a low in the upper 6s. Internally, I think we were all quite concerned, is MUFG going to stick by this? They were getting, obviously, their own investor pressure of, why would you buy something like Morgan Stanley in the 20s when the stock is down in the 6s?
People in the market did not believe that the deal would close. It was this moment where, you exhale, and then we're right back at it.
The Wednesday of the fifth week was probably my single worst moment, because that was the night when I really felt we might be running out of cash. And we had due diligence to close with the Japanese on the Thursday morning. And it was really touch and go.
We were very nervous about the markets. We could pull out, but we wanted to contribute to the stability of the markets.
I think MUFG understood that the best way to create value was to recognize value. So they did not try and push for the absolute lowest number, but they had to do something to justify that they were being responsible stewards for their own shareholders. So we changed the terms of the transaction to a lower price.
And I remember that the stock was trading down before Columbus Day weekend. And the problem was that Columbus Day itself, the stock market was open, the banks were closed.
We knew that if this money could not be, delivered, the markets will sell the Morgan Stanley stock down to possibly zero.
And I said, well, why don't we just take a check? It doesn't even have to be a certified check. We'll take a check. On Monday morning of Columbus Day, before the market opened, I walked over to Wachtell Lipton. It was about 6:30 in the morning. I was dressed very casually in my, khaki pants and sandals. And I just thought that they were going to send a messenger over to deliver the check. Instead, there was an entourage that came in, including a camera crew. I grabbed the jacket of one of the lawyers to at least put a jacket on. I put it on and ripped the whole back seam out. And I said, look, I'm really sorry. We didn't know that you'd all be coming. Otherwise, John Mack would have been here. And I said, I assure you, I am vice chairman of Morgan Stanley.
It was very important. Mitsubishi Bank is an enormous institution. They were the leading financial institution in Japan. If they're backing Morgan Stanley, it's for good reason. That combined the next day with the move by the US government to give TARP money to all the large banks in the US, it just gave the market confidence. Morgan Stanley's not going away.
We got lucky. At the end of the day, we got lucky. And it all goes back to Morgan Stanley having a one-man office in Tokyo, bringing trainees over here and working with them, and building a relationship and a culture. That's what Hirano-san remembered. We treated them with respect. They returned it.